Hello guys, welcome back to Katta. The cryptocurrency market can be intimidating, especially if you have little to no knowledge about it. Cryptocurrency is a relatively new concept, which means it is constantly reinventing itself, making it all more confusing. The industry is constantly reinventing itself and can be highly beneficial to its investors because innovations and new concepts are being made every day. One such concept is decentralized finance. DeFi is taking the cryptocurrency world by storm by offering unique ways to grow your cryptocurrencies. Explore the world of decentralized finance and discover which platform can help you to get the most out of your investments. Perhaps you are wondering what is DeFi, decentralized finance. DeFi aims to create a financial hub free from individual corporations or entities controlling it. Companies are prone to human errors and other things like corruption and folding, which DeFi aims to avoid. Transactions are done through a smart contract. Platforms programmed to do specific things without error, ensuring a purely peer-to-peer transaction. To eliminate intermediaries, smart contracts can handle all of your investments, and you can simply choose where you want to invest your tokens. Now let's see how to build passive income using DeFi. Using DeFi, people can invest, lend and borrow as they would with traditional cash, creating new job opportunities. This section discusses these jobs and different ways of growing your passive income. As DeFi attempted to change how financial institutions work, you can use the platform in the same way to maximize your profit. The only difference is DeFi doesn't rely on centralized financial institutions. Here are some ways you can double or triple your tokens when you sign up for DeFi. First, staking. Staking is the process of putting your crypto assets into a smart contract, effectively making you a stakeholder of the contract. Some smart contracts work through a proof of stake, meaning if a smart contract has tokens staked on it, it gains more credibility. You get paid with the same token. In DeFi's case, it's Ethereum, as an incentive for helping a smart contract gain credibility. This type of income building is similar to buying bonds from companies or the government. However, the other catch with staking is that it's equivalent to getting paid in dividends when investing in stocks. The longer you have a stake in a smart contract, the longer you reap the benefits of doing so. Second, becoming a liquidity provider. Liquidity providing is the process where liquidity providers or people who invested in smart contracts can earn 0.3% of the value gained through the swapping of tokens. For example, if Ethereum tokens are swapped for USDT, a liquidity provider can get an additional 0.3% proportional of how much they have staked in the smart contract. So essentially, staking and liquidity providing are connected. If you stake your tokens on a smart contract that exchange tokens, then you can reap the rewards. Liquidity providing can come with some risk. The risk that poses the main threat to your stake is impermanent loss. Impermanent loss happens when the price of a pooled token considerably changes, making it impossible for a fair exchange to take place. Third, yield farming. Yield farming is the process of using the tokens that you have earned from being a liquidity provider on a yield farm. A yield farm works similarly to a smart contract in that as long as you stake your tokens on the platform, you can earn more of the same token as time goes by. To dive deeper into the concept of yield farms, they are lending platforms that use your tokens to lend to borrowers. In exchange, you get rewards with similar tokens or different ones. The concept of yield farming is similar to time deposits for traditional fiat money, with the only difference being there can be high rewards in yield farming, but only if you are willing to take high risk. Fourth, lending. Other DeFi platforms are explicitly built for lending, while some platforms work in the same principle as lending. Lending platforms are specifically created for supplying your money to a smart contract. The advantage of staking your tokens on a lending platform is that some of these platforms offer a considerably higher interest rate, which makes it a good enough incentive for some people. So as we have understood about DeFi, I am going to introduce you to a great project called EPNS, which plays a key role in this DeFi world. So let's see how EPNS can be integrated into the various aspects of DeFi. Decentralized finance. DeFi is now a new home to a plethora of dApps, decentralized protocols, businesses, and rapid technological developments. But despite such momentous success, user participation and engagement rates in DeFi are still at the lower end. DeFi protocols have managed to garner significant attention from users, but they lack the mechanism that keeps users coming back from the protocol to engage with it. EPNS has been working towards building of this mechanism ever since its inception, and decentralized push notifications are now a part of DeFi. Here's taking a quick look at why DeFi industry is in dire need of a communication layer and how users and protocols can use EPNS to interact within the DeFi space. So let's see the need for EPNS in the DeFi world. As a part of one of the most rapidly evolving industries in the world, users of DeFi have to keep up with quite a lot of things. Ever-changing token prices, constantly updating protocols, new product launches, and investment opportunities to name a few. But because of the lack of reliable means of communication within DeFi, users are required to manually go about finding this information and keep moving themselves updated. This is quite a hectic task, especially since most of us are spoiled by the push notifications delivering this information to us in the Web2 space. Some of the critical communication that needs to happen are liquidation alert for borrowers and liquidators, staking rewards available to claim for stakers, staking rewards about to expire for stakers, price alerts for the traders, stablecoin peg slippage for the arbitrageurs, low gas cost for the devs ETH power users, rebalances for the token set users, index selection, weighting changes for the index users, token contract migrations for the protocol users, governance updates, token launches, new collateral types on money markets, new liquidity mining incentives, yield farming APY alerts, escrow periods ending, tokens coming unlocked. The possibilities are endless, and one of the main goals of EPNS is to reduce this communication gap in DeFi and help retain the good user experience which Web2 has established. Users are the center of all operations in the DeFi space. In fact, the very purpose of DeFi is to give power back into the hands of users. While this sounds very impressive, the implementation of decentralization has been a challenge in DeFi. This is because the lack of communications layer. Users are still kept in the dark about various happenings in the DeFi space until they check manually. This causes them to miss out on several investment and governance opportunities, reducing the participation and threatening decentralization. However, EPNS ensures that DeFi's core principles of decentralizations are upheld by constantly keeping users informed. In doing so, it creates a level of trust and transparency within the industry and improves their user experience significantly. If you want to know more in details about EPNS project, I have already made a dedicated video about this. The link is in the I button. The views and opinions expressed here are only for educational purpose. I am not a financial advisor, and every investment and trading move involves risk. So you should conduct your own research when making a decision. So that's all for today. If you found this video informative, please share it with your loved ones. And don't forget to subscribe to our channel. See you soon. Till then, have a great day.